Well, good afternoon, everyone. It's Greg Strachan speaking. As you all know, I'm a private broker at the Purple Group. Today, I've got with me Charles Savage, the CEO of the Purple Group. Thank you, Charles, for joining me.
How's it, Greg?
Last we had Charles on was about a year ago, and in light of what's going on around the world, economically as well as in the financial markets, I thought it was key to give everyone a perspective of what's going on, especially in relation to your investments, which a lot of people are questioning at the moment and are a bit uncertain about the future of where the financial markets are going in the near term. So I thought, get some insights from Charles as to how your investments are performing, the strategies which we're using, and we take it from there. And hopefully you guys get a lot of value from this short little discussion. Charles, the first thing I wanted to ask you with relation to the client's investments is, how is Emperor currently positioned, and why is it currently positioned as it is in these trying times and in these markets as we currently face them?
Yeah, so the market setup is more complex than it's been for a long time, probably since 2008. And when there's a high level of uncertainty, like there is now, and a high degree of volatility, the best measures for my money is to be defensive. So not to be as bullish as you are when markets are more certain. And the other thing that uncertainty sort of breeds is to have more eggs in your basket. So you need to be more diversified in times like this and more circumspect in your investment decisions. I think the key thing is, in what you look for from an asset manager, is for them to be more attentive in these times, to take what they see and make decisions that affect your investments and do the best they can to protect value as well as recognize opportunity. Because the two sides of the coin in times like this is, yes, markets are volatile, and typically, for December and January we saw aggressively down and now, strongly back up. Both of those market circumstances present opportunity. Much more difficult to make money in those times than it is in a bull market when rising tide lifts all boats. But ultimately, what you look for from an asset manager in times like this is to ensure that they are circumspect, that they are constantly reviewing the information that is coming to them, making decisions and taking action. The last thing you want is to have your manager sitting on his hands and living in hope. And I think that's a criticism of too many asset managers, is that through times like this where the skies aren't clear, the option is to sit on their hands and hope. And I think our clients will take comfort from the fact that the communications over the last couple of months have been more intensive than they've been when the markets were sort of going up easily. And the other side of it is that it's clear that we're making decisions, that we're taking market information and making decisions, and be those right or wrong, because we've got no crystal balls, we're doing the best we can and making the best decisions we can given information. But we've got there's no guidance system, there's no crystal ball. What we have is a proven methodology and approach which gives us the best lines, the best courses to take. And because the market is so volatile and so uncertain, that course of action is shifting all the time. And so we're reviewing it all the time. The investment committee is meeting all the time. The discussions, the debate, the information is robust. You've been party to that. You've sat in some of those meetings, and for me, this is when we earn our fees. This is when we really, this is where we have to stand up and make decisions that clients would arguably not make for themselves. And it's not about being right or wrong. It's about ensuring we're being attentive and doing the best we can. And if we end up being right, that's great. And if we end up being wrong, what we can't be accused of is sitting on our hands. So it's not, for me, it's underperformance in times like these is disappointing. That's how we earn a lot of our fees, is through the performance fee. It's disappointing for us as a business, but it's also disappointing, I'm sure, for the clients. But having said that, it's secondary to preserving capital and making decisions based on the information that comes to us and being attentive and responsible and professional with it. And I think, I hope that clients draw comfort from the fact that the activity and the engagement levels that they're seeing from us are higher than they've ever seen before. Because, quite frankly, when the market's going up and we're making good returns as we have over the last 5 years, there's really nothing to talk about. And yes, we outperform our peers, and we've done very well in the rankings. Really, that's all good and well, but really our mettle gets tested in times like these. Much tougher decisions to make, and for me, I think the approach that we take, which is to be much more circumspect, to sit more on the sidelines, be more attentive to the information, and that comes to us and make decisions on information is the best approach.
And I think thanks for sharing that. And I think the next question leads into that is, in these times with such severe volatility and there's so much uncertainty, and specifically in our case now, where a lot of South Africans obviously were very shocked by what happened in December with the government, some government decisions, and it become quite emotional for investors. And when you see the market dropping, and then suddenly over the last few weeks you've seen it rise, and that really starts to play into investors' emotions. And the next question is, how important is it to follow the quantitative model which has made Emperor the success that it actually is? Because in these times, sometimes it becomes almost counterintuitive to follow it, because what ends up happening is decisions which logically at the time one would think you should be doing the opposite, whereas Emperor is sticking to that model, and we underweight in a forward moving market currently. Why is that so important to stick to that quantitative model?
We've set up a quantitative system, an approach to investing. If we abandon that, what are we? That's who we are. That's what has created our success. And if we're going to change course, then we must be something else. We must develop new strategies or new approaches. We've got no reason to do that. Underperformance is part of our strategy. If anyone who's taken the time to review our track record, and in RFS, for example, I think RFS had 18 months of underperformance in its history, and yet over the lifetime has outperformed the market at 2 times, and I think over 10 years is in the top 1 or 2 funds in South Africa. Underperformance is part of the game. It isn't a reason to abandon a strategy. It is certainly a reason to review, to understand more, to investigate, but it's not an opportunity to abandon it. And so what we've got to do is we've got to review. We've got to see if the market circumstances present something new, a new opportunity for us. But we must stay true to the strategy. And if we find that there were pieces of information that we could have reacted to better, that could have helped us protect more client capital or made better returns, then we'll learn from these circumstances. We'll adapt the strategy and we'll deploy it. But for now, there's nothing like that going on. And unfortunately, underperformance is part of the game. I mean, anyone who's been invested in value, and some of the biggest managers in this country are value managers, and let's name a few: Coronation, Alan Gray. Go and have a look at their track record of the last 5 years. Their fact sheets have been decimated. Have they abandoned value? No. Should they abandon value? No. They are a value manager. That's what they do. That's what they're good at. Should you, as an investor, be invested 100% in value all the time? No. Should you be invested 100% in momentum, our preferred method? No. It's a balancing act. The value investment serves its purpose in certain market conditions. Not forever, not always. Alan Gray, Coronation are good examples of that if you look at their most recent history. For us, our investigations is that the strategy that delivers the best returns in the most market circumstances is momentum. And despite that fact, it still underperforms. Of course it does. And we're going through one of those periods where it's underperforming. And we're talking about a very condensed period of time now. We're talking about December, January. We've just come out of a year where our hedge fund is ranked in the top hedge funds in the country, been nominated as one of the best new funds. 3 funds were nominated for the best new hedge funds in this country. And you've got to, whilst we're not chasing rewards, we're really trying to chase returns for our customers and not awards. The thing to recognize there is those are the rock stars of the investment industry. The best managers in this country are in the hedge fund space. And in our first year, we've emerged in the top 3. So, this is not cause for us to abandon our strategies. We've got great strategies. They work more often than they don't, and investors who've been with us a long time will understand that. And those that have joined us in the short period of time are probably feeling very uncertain and very circumspect about the decision to join us. And all I can say to them is that part of the investment journey with us is underperformance. It's going to happen. It's happening now, and it's going to happen again. That's for certain. But I can also say for certain that we will have more periods of outperformance than we will have of underperformance. And our track record stands testament to that. But know this, we're not going to sit on our hands, and we're not going to say that we must just take underperformance as a given. Tom and the rest of the investment team are constantly looking for ways to improve the strategy. So if we learn something new from these market conditions, and this is, no market is ever exactly the same as it was before. So, Tom he says that, the future the future, I think his exact words are, the future rhymes with history. It's not exactly the same. So there's lots to learn from the history, but as market conditions unfold, there are particular market setup and circumstances that we can learn from, we can adapt, and if we feel we're onto something, we can introduce into our investment strategies. And so certainly, from this underperformance, we need to review, seek to understand, and see if there's anything worth adapting, anything that we could have forecast, anything that could have changed our positioning. But for now, the most responsible professional thing for us to do is to stay attentive, stay circumspect with our client capital, protect it as much as we can, but also recognize that our jobs ultimately are to go out there and seek returns and ensure that we go and do that as best we can in the appropriate
I think
manner.
that's such a good point, and I think for clients listening is, when investing in any asset manager, we are long-term investors, so returns are built and solidified over 3 to 5 years and longer. And through these times, actually create opportunities, although it's hard to see that as an investor in volatile markets. The way that Emperor manages the money in terms of reducing gearing significantly actually creates opportunity, in that the amount of buying power that's sitting waiting is huge. So there's a huge opportunity left for clients. So I really, really appreciate your insights there. To end off, I thought I'd talk a little bit about Purple, obviously the holding company for Emperor, for those of you that don't know. The Purple share price last year had a fantastic run. I mean, I think over a year and a half, it went from 20 cents almost to 1 rand. Now it's settled down to about 60 cents. Maybe just give people an idea, for those that haven't read the annual report, what were the drivers in that? What's happening in Purple that's so exciting? And how does Emperor, as an investment house, fit into that growth strategy?
Yeah. Did it go to a rand? I think it was 99 cents. Yeah. Good. Thanks for the question. And we do spend a lot of time trying to unpack this for our shareholders and potential shareholders in our annual report. And I do encourage people to go and read it, because it's not a typical annual report. I mean, you've seen it. It's very friendly. It's easy, if you like. So please go and read it and see and give us ideas of how we can improve it going forward. Because I think companies don't spend enough time unpacking the intrinsic components that drive the value. So thanks for the question and giving me the opportunity to tell people. The sum of the parts, the cash cow, the lifeblood of the business is still GD247.com, 15 years old. Great cash generative business, highly profitable, but not growing very fast. So it's got moderate growth rates in the context of the group, but it's our license to go out and grow the group, and it's our balance sheet and cash flow to afford that growth. Our aspirations there are really to ensure that we own the intermediate to novice trading environment, and that we create services that allow access to the markets that is easier than our competitors, if you like. And that leads me to Easy, which sits under the GT247 brand. Easy is the latest and I guess greatest brand in the company, and the Emperor brand manager Res is standing here, so she's going to hate me for that. But it's recently helped the company win a whole lot of awards, the Accenture Innovation Award, and then top stockbroker of the year, against all of our peers. And I guess the thing that it does that no one else is doing is it's recognized that a large part of South Africa has been disenfranchised from owning shares. And it's not about the fact that they can't go and buy shares, it's that the access points are unfriendly, intimidating, and inaccessible to them. And Easy's understood that and created a platform that is really empowering all South Africans to get into the game. And it is achieving way beyond our expectations. I mean, it's crazy. It's creating stories which we're not telling well. stories of 87-year-old South Africans that are buying shares who previously felt that they didn't have enough money, they weren't smart enough, and they couldn't have gained access to the markets. And it's doing the same for 12-year-old kids who are buying portfolios and sharing in the experiences, and everyone in between. And it's growing by hundreds of clients and customers every day, and I don't even think we even started promoting it. So there's definitely, it's created some excitement within the group. It's certainly given us almost a social purpose, and it's taken the brand, which I guess could have been accused of being a little bit edgy in the fact of derivatives and online trading, and given us a sort of superhero kind of status. And there's no doubt that despite the fact that the economic value that business brings to the group, the profit that it generates doesn't, it's all losses for now, it's an we're making investments. Despite that, it's creating some excitement, and that is definitely returning to the share price. People are going, well, if this is as good as it looks, maybe they could have 100,000 clients in a very short period of time. So there's no doubt that Easy is playing a big contribution within the group. What it is becoming for us is a trawling net, and it's a trawling net that is much bigger than any other business that we've got within the group. So it appeals to everyone. There's literally no one that I can exclude from who Easy Equities can service. I mean, sure, so a kid of naught, no, but there's no doubt that the grandparents and the parents can gift that kid, shares at the age of naught, and we can facilitate. So actually, a naught-year-old kid could be a 1-month-old kid could be a client of ours. So big trawling net, and once all those customers are inside that trawling net, it gives us the opportunity to talk to them about the financial services and products and services that can empower them towards wealth creation, and that's where the other products fit in. And that leads me to the discussion about Emperor. I mean, Emperor, 5 years old now within the group, 3 years of being a serious contributor to the group and having serious effort. Emperor currently pays for about 30-40% of the cost base of the group, and it's only 5 years old. The ambitions for Emperor are so far greater than what it is today. Today it manages just around under R1 billion worth of assets, which is a big number, but it's small in asset management context. Our aspirations in the short term are to get that to 2 billion over the next 12-18 months. That's not going to be easy, but especially in current market conditions, that's going to be more difficult. But we think we've got the right stuff to do that. And then we believe once you get to that sort of 2 billion, there is a tipping point in asset management where you become, as opposed to a teenager growing up in asset management, you become a more serious player and you get a bit more attention. And part of getting attention, unfortunately, is also about getting awards. And it's not really what our purpose is. But fortunately, we're winning a whole lot of awards. So, the Hedge Fund of the Year nomination, our unit trust, which definitely warrants a mention, first year, top 5 unit trusts in the country, in like the A League of unit trust categories, against all of the big names, 800 funds or 400 funds competing in that general equity category, 4th in its first year. So that's very lucky, and the more awards we win, the more attention we're going to get from the institutional money and retail money as well. So for me, Emperor is a sort of sleeping giant in the group. It's been growing at a good, adequate pace, but I think that it's going to get to a tipping point, and then that's going to become exponential growth. And while I don't think it's the next Coronation, I never want to be the next Coronation, because I have no intention of running 800 billion rand in assets. It's not a far cry for it to get to 8 billion in assets in a very short period of time. And if 1 billion of assets is paying for 20-30% of the group, you can do the maths around what 8 billion assets would do for the group. And really, the underpin for the group in terms of its cost base and a reasonable amount of profitability needs to be Emperor. Everything else we do will then just flow to the bottom line. The last piece of the puzzle is GT Private Broking. It's a small business, it's a niche business. It's about providing the best possible personalized service to our customers, and because it relies on human skills, it's not scalable. So I'm never going to have 2 million customers there. I want 2 million customers in Easy and Emperor, which are completely scalable businesses. In GTPB, I want the best 200 clients, and that's it, and I want the best 10 brokers in the market servicing them. And it will always post a very healthy contribution to our income statement, but it won't put the spice in the share price. So really, customers shareholders, prospective shareholders want to understand how we're doing, watch Emperor and watch Easy, and know that GT's got the cost base and funding covered.
Thank you, Charles. And just to clarify that when Charles talks about Easy, he's talking about Easy Equities, so it's easyequities.co.za. jump on there and have a look. It's by far the cheapest, most affordable and easy equity platform out there, frankly. So Charles, thank you very much, and we'll do another video very soon. So all the best, and if you've got any questions, by all means give us a shout. Thank you very much.
Thanks.